What type of market is it? Well, it really depends if you're a buyer, an investor, or a seller. I'm Michael Ouzas. I'm a realtor in the Greater Toronto Area, and in this video, I want to go through the three different things we are seeing right now. Let's talk about how the market looks for buyers, let's talk about how it looks for investors, and let's talk about how it looks for sellers. Before we get started, if you want to take a moment to comment down below and let me know what you are thinking about the market right now. If you ever want to book in a call with me, there's a link in the description. You can just hit that and book into my calendar at any time. So let's talk about the Greater Toronto Area market stats, and we're going to use August 22 numbers because this is a full month of data. Now, I have seen the numbers of where we've been for the first half of September, but it's not something I really want to break down in this particular video. I just want to go keep up with the market updates that I do month after month. So we can see the average price right now in Greater Toronto Area as a whole for all home types is $1,080,000. We're up about just under 1% from where we were last year, which was about $1,071,000. Here's something that really stands out to me is the active listings up to 13,300, which is up almost 60% from where it was last year. And we're kind of back to those 2019-20 levels. They were up just around 16,000. So definitely trending upwards compared to where we were in 2021. Total number of sales, and this is something that I really think is also important, is that we're at about 5,600 sales, which is down about 34.5% from 2021 and way down from 2020. We're just below where we were in 2019. So just something to keep in mind there. But you can see the average price going up year after year after year. And here's something that I always point out in these videos, the months of inventory, 2.36. And if we remember for July's stats, we were over 3 months of inventory at that time. In the condo corner, average sale price, $711,000, condo sales down 40%, 1,500 condo sales. And compared to last year, 2,500, the year before, 2,200, and 2019, just over 2,000. So definitely a big drop in condo sales. So let's take a look at Toronto proper, and we can see the average sale price, $1,030,000. Active listing, just over 5,000. Total sales, down 37%, about 1,900 sales. In 2021, that was 3,000, 2020 over 3,000, and 2019 over 2,500. This is where it gets confusing sometimes in the news articles. It says sales are way down or prices are flat, or it's really on a case-by-case basis, and we can kind of spin these numbers in however scenario that the headline needs to be. I just want to give the exact facts of where Toronto is. Months of inventory, 2.71. Again, this was over 3 last month. Average sale price for Toronto proper, just under 740,000. Condo sales, 1,000. That's down 41% from last year. Last year in 2021, there were 1,700 condo sales. 2020, 1,500, and 2019, 1,400. Average sale price kind of going up here. And if you remember my video that I spoke about last week, the average sale price for 2021, this actually mostly happened in the second part of 2021. The first part of 2021 and the end of 2020 was quite dismal. Prices actually dropped about 12% for condos, especially in the downtown core. Let's jump over to my favorite chart here, and this is the benchmark price over time. The reason I like this is it gives a good representation of where things are at. We can see here condos August 2020 at 611,000. They actually dropped to under 600,000 in December 2020, and then in August kind of made that up here and kept going throughout March 2022, which was the peak for condos. Now in August, we're about 770,000. So it's down about 60K from the peak, 60, 70K from the peak. For townhouses, same kind of thing, flat through December and then started to creep up through last August, all the way up to a high in May of 995,000. And in August, it's down about 70,000. So not quite 10% down. Houses dropped from August 2020 to December 2020 and then started going up pretty steadily throughout, and then you can see where it hit in February 2022, a massive increase from August 2020, about $500,000 up, and then in August it's given some of that back to $1,554,000 for a detached or semi-detached single family home here in Toronto. One thing to note, if we just did a 10% trend line from August 2020 to August 2021, it's up about 7 to 10%. And then from August 2021 to August 2022, up another about 5 to 7%. We're back to that trend line. And if things just kind of stay steady Eddie, just like Toronto real estate typically does, we're right back in line with that. So that brings us to the monthly sales data, and we can see here where things have been going. And remember, we talked about months of inventory in a previous video. I like how this is laid out because we can see where it was compared to last year. And last year in August 2021, there was under a month of inventory. That means if every property sold, we'd be out of houses or properties in less than a month. I like this months of inventory because it does give a picture of where things are headed. And if we're dropping in inventory, typically prices will continue to rise. Months of inventory keeps going up in our September stats. Typically prices should flatline even more as interest rates keep becoming a major topic these days. And obviously another rate increase here in September will definitely play a factor in pricing as well. I know everyone's been talking about a market shift. Well, the shift has already happened from an ultra seller's market to somewhat a little more balanced. Now, we still statistically are in a seller's market. However, we have seen things definitely slow down. As we've seen in the data, it really depends if you are a buyer, an investor, or a seller. So if you're a buyer, let's talk about how this looks for you. The prices have definitely come down from the peak in February. We're down about 10 to 20%, depending on the market, of course. Now, what that means is your down payment will be less, your land transfer will be less, and your point of entry will typically less. However, has the price become more affordable? The sticker price has definitely become more affordable, but the monthly cost is relatively the same. As interest rates go up and the prices come down, the month per month cost of these properties are staying somewhat in balance. Now, we still haven't really seen the point where that balance has shifted to the monthly is more affordable. So we will see how that plays out if more interest rates keep increasing throughout the year. There's two things I like for buyers right now is number one, you have time to go around and shop. And number two, you can add conditions into the offer. Now, the great properties are still getting a pretty good amount of action. So I'm talking the A++. They're fully staged, they're fully renovated. Those kind of properties we have been seeing still getting multiple offers. They're not getting the price that they would have received back in February, which is great as a buyer. However, they are still getting good action. The other thing we've been seeing is properties that were on the market for 30, 40 days have started to pick up and get action now. I personally seen 3 or 4 properties that I saw all throughout the summer just sit in the market. And now they just sold. So we've been seeing action definitely pick up. However, not as strong as it was back in February. In my opinion, the first time buyers, those who were looking to get in and maybe didn't quite have that down payment back in February, March, or they were getting discouraged because of the ultra competition, it's your time to get out there again and start shopping. If you're a step-up buyer and your property has gone up in value over the last couple years, now might be a great time to make that move to maybe a detached home. Let's say you owned a condo for a few years and it's gone up in value. Maybe you've lost a little bit from the top in February, but the detached market, which you'd be looking to step up in, is probably lost quite a bit more. If you think from a percentage standpoint, 10% of 600,000 versus 10% of 2 million is quite a big difference, and you should still end up net ahead. Now, if you're an investor, you've heard me talk about rental rates going crazy. The rents are up about $458 from where they were last year. So that same one bedroom that you could get about $2,000, $2,100 for last year, right now you're looking at $2,500, $2,600. Couple that with the lower purchase prices, and now this might be a great opportunity to get that property without the ultra competition that you would have had back in February. If you're able to renovate, I found that properties that are either a C level, which is a total renovation, or a B level, which is kind of in the middle, not quite super renovated, but not too far gone. Those are where there are properties that have been sitting on the market. And I think there's a great opportunity if you're an investor to do some renovations and get higher use out of properties if that's possible. If you're a seller, the chances of you getting your price from back in February, March are pretty slim right now. However, I have been seeing properties that have been sitting on the market for 30, 40 days start to move. Buyers are out there. And even though the price have come down, it's important to do a few things with your property. The key right now is to have a great plan. You want to have a great pricing strategy. You want to have a great marketing strategy and make this property look amazing. The better it looks on photos and in person, the better your chance will be to get people in the door and to get action on the property. Now, again, you might not get that price that you would have got back in February, but having a realistic price point, and if you've purchased this property a few years ago, chances are you've still done quite well to date. And if you do need to sell, make sure you're working with someone who does great marketing and is going to invest in your property to help make it look its best. Getting those iPhone photos versus professional photos just isn't going to cut it in today's market. So that's it. I'd love to hear your opinion on if you're a buyer, seller, or investor in today's market, what you think is going to happen in the future, and where you think we're going to end up by the end of the year. As always, hit that like and subscribe button and follow me on all social media at Michael Ouzas Real Estate.